All right, let's go ahead and get started here. So, good evening. Happy Taco Tuesday. It was an amazing day here in the trendy room here at Simpler Trading. And I wanted to take this moment, instead of recording this video and then sending it out, there's a lot of stuff I have to do behind the scenes. It makes it quick and easy if I just stream this really fast and then I'll save it and then send a link out on X and so forth. Anyways, it's all that mumbo jumbo stuff. But I hope you had a great, amazing Taco Tuesday. It's one of my favorite days. Get to go out with my family. The girls came out. We had Ashley's mother and her boyfriend come out, and we just kind of hung out and talked around the table. Had a really good meal. I mean, where else, right? $2.25 a taco. You got to be happy with that, especially during today and inflation and so forth. Well, Netflix is a really like hot subject, right? And I'm going to go ahead and turn off my video capture device here. So let's go ahead and turn that off. There we go. And I want to talk about Netflix and how I traded it. So what I did, and look, disclaimer, okay? This doesn't always work, but holy crap, does it work a lot. And it really doesn't have to be difficult. Like what I do is I just use supply and demand. The things that were taught to me. And then over the years, I started to realize I'm like, wait a minute, supply and demand can be used for any catalyst that happens in the market. Seriously. You just identify the zones, and whether it be earnings, whether it be a news catalyst, whether it be something out of left field that just kind of happens, I learned to just say to myself, hey, this is a catalyst that pushes price into a zone that we've already identified. And that's the beauty of it. See, before we even got into Netflix earnings, we're already identifying levels where price could go to. Okay. And I do this from a top down approach, and I won't go too far into it because believe it or not, right here on YouTube, I have several videos where I've taken these type of trades before. And again, I'm going to kind of go through this with you. A lot of traders use iron condors, and what they do is they use their monitor section to kind of take a view and look at what market makers are expecting, what market analysts are expecting when you go into an analyze tab and you look at Netflix today and it said it was going to go up $38. Okay, so they were pretty close. I mean, it stopped at 492 today. We're at 534, but what happens on the wind, or what happens when econ news hits tomorrow morning, right? Let's say that it's bullish. Most likely Netflix will go up another 10, $15. So it could beat those expectations. Matter of fact, I've watched a lot of professional traders actually in this name and Netflix try iron condors. And I remember one specific time that a trader was putting on an iron condor. And again, we all have this, this can happen to anybody. And it's not to point fingers and say, hey, they did something wrong, because you never know when you're going to get like a 2 standard deviation or a 3 standard deviation or anything like that. But I believe it was Netflix and it went on a 3 standard deviation move. And I just, I always think to myself, like, I would hate to be an iron condor in a situation where I'm selling credit and that go totally against me. I don't want that to happen to me. I don't want to be assigned anything. And so I thought to myself, why don't we just take supply and demand and buy debit spreads? Okay. And if you don't know what a debit spread is, it's really simple. And I have two different charts on here, and this is my live account. And I want to open this up for you, just kind of show you my train of thought, and then we'll go to the chart. So the first thing is I am bullish on Netflix. Matter of fact, we had a position that I closed today that was just straight up calls. And we got profits from that. I think we got like 40 something percent, which was a nice trade, right? But I'm bullish. So if you notice here, I have two sets of options, one for the 16th and one for the second. All right. And on the second, what I did was I came in here and I went way out of the money and I bought a 455 and I sold a 450. And just bear with me for a minute while I look up my alerts here. And if you guys didn't know, my API alerts, so the API behind Thinkorswim is directly linked into our trading room here. So as soon as I take a trade, it's sent milliseconds for our members to be able to see those trades, which is really cool. All right, and I'm going to come in here and show you this trade. Just give me 1 second here because this is important the way that we set these up. Okay. And we are going to go. We had such, I had an amazing day. I thought today was awesome. I really did. I was like, man, this was fun. And I wish we could repeat this every single day. But the truth of the matter is, I don't my big thing in the back of my head is that January is always fun. It always pumps you up. It gets you to the point where you feel like you're like, well, I know we should be walking on eggshells. I know that we should probably pump the brakes here. But am I right when I say that the market really finds a way to catch you off guard all the time? Do you guys feel like that happens to you? Because I definitely do. I definitely feel like the market just somehow, even though you tell yourself every single time you will not catch me off guard next time, somehow it does, and we all sort of have a little bit of FOMO in our blood, and it's really easy for us to be caught off guard. Anyway, so for this particular Netflix trade, what I'm doing here is that I'm buying the put and the call side. And when you're thinking about it, when you first see it, you're probably thinking to yourself, like, okay, well, there's no conviction in that, right? And I just want to show you this really quick. So I'm going to bring this down. This is our room here. And you can see the Netflix trade and so forth. So let's get up there. And it was towards the beginning of the morning. You see, we traded some DWAG too. That was up like 80%, but I'm holding on to that bad boy just in case something funky happens. And we're going to come up here. A lot of winners today, by the way. You guys can see that. There's Melissa, one of our great traders here in the room, 79% on some of our IWM puts, which was like a more of an intraday type of trade. And I'm just scrolling up here. And again, none of these are written out, which is really cool. The only time I write something is when I'm just giving like an update on why I'm taking something and so forth. So we're going to keep scrolling there. And then when I take trades, we post our charts so everybody can see why we're doing something like that. For example, this is the remainder of my Chewy position. And so we had taken some of this off, and I have quite a few days on here, but it did become positive, and we kind of reset that, if you will, cost basis on those Chewies. Okay. And let's take that off there. We're going to keep going here. And I promise you we're getting there. There's Netflix. Okay. So the reason why I'm showing you this, I want to show you how much I paid for these. Okay. So on the call side, I paid $1.37, which is 137 bucks, guys. Okay. And there's a reason why this is important. So $137, and then we come down here, and then I paid 125, right? So 137 plus 125, and it just in case you didn't know what that is, we're going to type it in here, and then it's equaling about $262. All right. So remember that. This is my total cost on the entire trade on the put side and the call side. Now, my number one goal when doing this is to make sure that if one of my zones is hit, okay, that it's going to cover both sides of my trade and some, okay? And just to tell you right off the bat, this particular trade on the call side pays me almost $800 and some change just for the call side. Okay. So again, almost 800 and something dollars. So this is like a 6.5, 7x trade if this Netflix 550 by 560 gets hit. Okay. Now I won't get full amount because I bought out some time, but I'm going to tell you right now, if we're even close when we open up, I'm going to make everything that I paid plus some. Okay. Just want to make sure everybody understands that. And this is really important to understand, all right? And I just want to show you these are real trades. I really took that trade. It's coming straight from my account into our room, all right? And again, it's $262. Now, a lot of people get confused when they don't know anything about debit spreads. And what I'll tell you is if you go out on YouTube, all right, or even here, in the simpler room, it's, we have a lot of education that you can learn, but also even on YouTube, you can just put in how to trade a debit spread 101. It doesn't have to be complicated. Basically, all you're doing And again, this isn't like a whole education on debit spreads, but all I'm doing is buying on one of the sides, so on a put side, and then I'm selling. And what I do is I pay the difference between these. Okay, that's it. I pay the difference between the two costs of these. All right. Now, the disadvantage is that you are limited on your payout, if you will. Like I can only make, like if this were to hit, let's say I can only make $500. All right. But my cost is the difference between the two. And I just brought that up a few minutes ago. It's very inexpensive, a hundred and something dollars, opposed to, okay. And I know there's a lot of traders out there because I was in your shoes a long, long time ago. I literally would set up a trade on the day of earnings. I would come in here and be like, you know what? I watch a lot of Netflix and I hang out with my girlfriend and we love Netflix and chill. You know what I'm saying? So, because of that, I'm going to come out here and buy a call at $6.40 or whatever it was this morning. Okay. Instead of paying 600 bucks, I'm only paying $200 to play both sides. I just want to make sure I drill that home. Now, the reason why I decide to buy these dates is because, again, overall, I'm extremely bullish in the market. But I also feel as if things are extended a little bit. So, what I'm doing in these earning trades that I choose, and it's only names that I really want to, so your high beta names, if you will, things that are going to move, that's what I'm interested in. Okay. So because I'm long-term bullish, I'm finding the call debits with the monthly expiration, okay? And then I'm either buying this week or next week for the put side. And again, very inexpensive, okay, for that put. And if it were to pay out, like I said, it pays several $100s. It pays for the entire trade. Now on this trade, 16 February, just so that I can make you guys understand this, I bought the 550 and I sold the 560. So this is a 10-point spread, if you will, between 550 and 560. Now, tomorrow when we open up, does the price have to be at 550? No. It's just like any other option, okay? Meaning the closer I get to it, the more that it's going to gain value. And especially when we're talking about the fact that I have 24 days and this bad boy just gapped up, right, about almost 40 plus dollars. That's a big deal. People are going to be FOMOing into this trade. And I want to give you like a little bit of background story. Like I talk about this a lot, and a lot of people they teach to sit on your hands. They tell you that's the smart thing to do. Like sit on your hands. You don't need to get involved. It's earnings. We can't tell you which way price is going. Hey, Jerome is about to speak on the mic. I think it's really important we sit on the mic or sit on the mic. Just sit still, sit on your hands, and not do anything until the news comes out. I just have to tell you, okay, that I think that's absolutely absurd. I seriously do. And the reason why people do this is because they have no process. They do not understand, okay? They do not understand a process. They do not have a process that they have tried and seen that it can actually work for them. And I hope that this process, you can adopt it and you can kind of say, man, I really like what he's doing here. And there might be, if you want to change it up a little bit, you can do that too. But I have been doing this for a very long time and I absolutely love it. So, again, $200 and some change of risk here, guys, not 600, willy nilly. Hey, I think it's going to go up because I like Netflix. And hey, I hate Netflix because I really like Peacock or whatever, right? No more of that like BS. This is all based off of supply and demand, and I'll show you that here in a second. Okay. So again, I am structuring my debit spreads around supply and demand, and I do not use iron condors because in a bullish market, especially in a bullish market or a bearish market, we can see a more than one standard deviation. Okay. Now, how can I figure out what that deviation is going to look like? I don't have a crystal ball. I just simply use the structure, and you can find that structure because I teach you right here on YouTube and also here at Simpler Trading, right? The basics of finding, and really not just the basics, really just what you need to find that structure. Okay. So again, guys, these are called debit spreads, not credit spreads. All right, it is a debit. It is coming out of my account. It is, again, capped. I can only make so much from this trade. This particular trade right here, again, was only $1 and some change, and it can pay me out a max of 800 and something dollars. Remember, I only paid about 265 or so. So if I make 800, all right, then guess what? I paid for the whole thing and some. Now, the cool thing about this that I didn't talk about, because this is most likely going to gap up in the morning, what I will do, and this is the end part of how to manage this trade, is what I can do is on this side, and I would not expect this thing to come back down to 455, but you never know. Like this is a big beta name, right? It moves and it has 10 days. So what I'll do immediately if we gap up big is I come over here, okay? And these things will look like pennies. All right, they'll look like pennies. And what I will do is on the short side, you buy this back. When you buy this back, what happens? Okay, I'm going to buy this back. That means this is gone. And right here on your screen, all I will be holding is a put for 455. Now I get it. This thing will probably only be worth 10 cents in the morning. Okay, like something crazy. And you're probably thinking to yourself, there's no way 455 can be hit. Now, I'm telling you, the probabilities are probably low, but you don't know what's going to happen. So when you do something like this, let's say that tomorrow on the call side, that I make a surplus, all right? And again, this is a hypothetical on this trade. I could make up to 800 bucks, all right? But let's just say I only make $400. Okay, I still made profits, right, guys? I still make 400 bucks. Let's say that it peaks up to 550, and we're really, really happy. And I buy this thing back, and these right here are only, let's just say 25 cents. Okay, it's $25. And let's say all of a sudden some sort of catalyst comes out on Thursday and the market absolutely tanks. I mean, one of our biggest pullbacks in the history of 2024. We've dropped 3 or 4%. The market looks ugly. And lo and behold, Netflix is sitting down here around 450 or maybe even 500, but it still has 9 or 8 days left. Guess what? This 25 cents then increases and is looking at about 4. Okay. So we take this 4 and we take the 400 that we made, and all of a sudden, again, we've made $800. Okay. Now I have been in this trade and I have done this live and I've done these kind of things plenty of times over the years. And most of the time, you're just making money on one side. But there are these rare exceptions that you do make money on both sides, especially when you're buying time like this. I have a long time to get to my 450 or sorry, 550, and I have a long time for it to drop back down to 450. All right. So again, nothing, don't say it can't happen when it comes to the stock market. So again, this is my strategy. All right. So now let's move on and come over here into the chart itself. This is Netflix, and I shared it on X, and I shared it here in the room as well. And I just want to show you guys what this looks like. Okay. Now, this is on a daily, and for anybody that's new out there, you're not going to see aftermarket unless you at least drop it below a day. So we are going to go to a 4 hour. This is what the chart looks like. And if you guys read right here, this is the chart that I presented. I said possible range, but when I say possible range, I mean really what the market makers and what everybody's thinking to themselves is that, hey, price can stay in this channel, if you will. Well, the possible range, but I like the bigger move over a longer period. If you come up here, again, exact chart that I gave you, and when I say gave you, for your viewing pleasure out on X and in the room before I even took the trade, this is what I wanted to see. Okay. So I shouldn't say before I took the trade, before the market even got close to closing. So I set this out early today. This tells you that I have a 24 DTE. What does DTE mean? That is days till expiration. That means I have 24 days until this expires, okay? And this buy and sell is telling you, hey, this is the debit spread that I bought, the 550 by the 560, okay? This is the put side. Notice I only did 10 days just in case, all right? If we open here, I buy back the short sides of my spreads. And what I was saying, guys, is if for some reason I was completely wrong and this just opened up sideways, I'd buy the short side on both of these. That means I would get rid of this thing over here, this 450 up here, and I would get rid of the 560, and then I would be long the 550 and long the 455. Okay. The reason why I do that is because the implied volatility would really crush the premium on these options, and then I would have a discount and I would be in it. So going back to everybody's telling you, hey, sit on your hands, wait for things to happen. I do this over and over with my favorite stocks, and I love to use options going into earnings. Let's pretend that there's a catalyst. As a matter of fact, we don't even need to pretend. This is a great example right here with Netflix. And this is what I see from a lot of people. A lot of people, you got like two types of traders, right? You have the type of trader that says, I'm not doing anything until I see earnings. I get it. Okay. I'm not making fun of anybody. Then you got the type of trader that says, I'm just gonna go for it, man. I love to Netflix and chill, man. I eat munchies and I like to chill out and I watch a lot of movies and that's my thing to do. I support them. And not only that, I bought it for my dad and my mom. I bought them subscriptions this year. I know it's going up, right? You got those people. It's true. Really, there are people that do that. All right, and that's the reason why they buy calls. And I know because that was me when I first started. Right, I always like made up these crazy ideas why I thought something was going to go up or down. It never worked. It hardly ever worked. But so you got these type of people. But here's my thing that I really want to teach you. All right, if we go to a whiteboard and I love to do this. I don't care if this is Jerome speaking. I don't care if this is about a Fed rate decision. I don't care who's elected, but these are called chaotic candles. These are imbalances in the market when stuff like this happens. And the person sitting at home that is taught to sit on their hands, what are you going to do? You're gonna buy the top here. You're gonna pay up on the premium. This is like, for example, I live on the water here in Florida. This is like buying insurance on hurricane insurance the day that the hurricane's hitting you. Like, please, you're going to pay so much in premium, it's not worth it. Okay. And then on top of that, you have to have a process that is legit. We have one that's legit, but maybe you don't. And the only thing you're thinking is, man, that's a beautiful candle. You start to FOMO, you think it's going to 700, you start getting crazy, you buy up the premium. You know, you paid $8 for a contract that's out of the money, and all of a sudden it drops, and now it's all the way down to two. And you go, how did that happen so fast? It's because they burned you on premium. I would much rather use supply and demand and use debit spreads in a environment like earnings. That way, my risk is small, but my return is high, and my probability suggests that I know what I'm doing because I'm identifying the zones that are already on my chart. Now, you may be wondering where these zones came from. On a 4 hour, you cannot see them. But if we go to a higher time frame and we start to look, we can see different things and maybe what I'm looking at. Okay. For example, if you look across here, you'll see right in this section we have a big sell-off. Okay, this is not like Netflix is at all-time highs. The next thing that you could do is you could come up here and identify this peak to this low and anchor your Fibonacci's. And you will notice that the price of Netflix, and I noticed this today, was at the 618. And for our trendy members, you guys should know what that means. If we break above the 618, I talk about the 85% probability of a certain level hitting. Now, that certain level is still far away from where we are now. What I did was I simply came over here and found the level associated with these two candles. And then I break it down. I go to a different time frame. I go to a daily and I look over to the left, and let's put a couple more days on here. Matter of fact, let's go to time frame. Let's do 2 years and hit OK. Might have to come just down just a little bit more. Sorry about that. And there we go. And then we're right in this area here. And what we do is we investigate this area. and we look for the structure that I teach you about. And if you look there, you will find exactly those structures. Okay, folks, you're going to see that structure in here the more and more you break it down. Okay, we also have a trendy turn, not a turn signal, a sell signal in here, and it's letting me know that we have a gap fill around 560 and that we have some inside and down formations on lower time frames in this structure. So when we go back to here, and then you look at it from a 4 hour perspective, sure, so you can see the aftermath. Now you understand where we're peaking into, okay? And you understand why I would target in this area. It's from a higher time frame structure. So again, structuring my debit spread around that level. And then down here, the reason why I use this is because over here on a higher time frame, not the 4 hour, we have some demand. But we also have the trendy edges. And remember, the trendy edges identify supply and demand. They are color coded because they are associated with different time frames. And the reason I did that is because not everybody likes to trade for 4 months opposed to 3 days, and some people only like 1 day. And so the colors are for specific traders in our group or who want to learn supply and demand, but don't have the time to go through all the different time frames. All you have to do is look at the different colors. Once you learn it, which takes just a couple weeks, and you're like, okay, hey, this is great, right? You understand. Orange means daily, yellow means weekly, purple means this, blue means that. Then you understand exactly how long you want to be in the trade and you understand where your targets are and where your entry should be. Okay. So again, really straightforward, guys. And again, this is just impromptu me talking to you coming back from a Taco Tuesday. No, I didn't have any margaritas. I'm dry. I just got off a cruise. I don't, I'm not going to be drinking or anything like that for a while. That was a pretty crazy cruise, if you will. We had a lot of food, a lot of different drinks. It was a great time, but time to get back to business. And by the way, guys, if you're going to Las Vegas in February for the Money Show, I'll be there. I'll be speaking on Friday in the morning, and then I'll be on a panel in the afternoon, as far as the schedule goes right now. So if you guys can make it out, it'd be absolutely wonderful to meet you. I would love to meet you. I'll be talking about supply and demand when we get there and kind of going over some examples from this year and also just kind of how I apply supply and demand to everything, earnings, FOMC day. It's pretty cool to watch hundreds of people watch me live every day and see the proof of concept. I love it. I love seeing other people succeed. That's what we're here for, just to educate you on a system that I believe can make you consistent. Okay. Do you guys have any questions out there? Hey, how are you? If you guys have any questions, just let me know. I'm trying to see if this thing works. Let me see there. Hi there. Let me see if this works. I use OBS software, so I'm not sure how good this is. I should have loaded up more on the spread. Yeah. Yeah, I hear that. Do you guys have any questions? I think, YouTube is weird. I shouldn't say weird. They'll probably kick me off or something, but I think there's a 15-second delay. There's always a 15-second delay, I believe, on YouTube. So if you guys have any questions before I jump off on this session, just kind of talking around the Netflix trade, just let me know. Oh, okay. Cool, Ken. Cool. Yeah. So we'll see where we open up, guys, tomorrow. And by the way, I updated on X and I updated in the room the new ES futures and NASDAQ futures blueprints for tonight. And so far, things are looking pretty good over there. We'll see what we got here. Let's pull up that. Come here. There we go. And the this ADX scan, there's a lot of names on here that are firing off, looking amazing. You're in the debits as well? Cool, cool. Man, they work a lot. They really do. I mean, I would be shocked if we open up here with 24 days open, you should be able to make your money back. I wouldn't see why not. You got to think we made money on the Netflix calls that we had as well. So, overall, you're doing pretty good on your Netflix trade for this year. So I don't see you guys asking me this question, but what do you do when you open up tomorrow on Netflix? We'll have a PMZ, right? The PMZ, pre-market zone, that'll identify a long and or a short that you'll be able to trade off of. Let's go over while we're sitting here. Let's talk about the PMZ just for a minute. The PMZ. Let's look at the ES futures today on a 5 minute, so we can kind of talk through it and see. Go to the 5 minute. Right, and there's our chart. And by the way, these blueprints have been awesome. So this is the PMZ. The pre-market zone opens up every day. It really is, in my opinion, and I say this with a lot of confidence. I feel like it's the best system out there. One, I didn't make it up yesterday. We've been using the PMZ for many years, and it's really straightforward, guys. It's for mechanical traders who don't overthink things. And if you've been programmed to think too much, then you can be reprogrammed, I promise you. Okay. But this trade is for futures trading, Forex trading, options trading, equity trading, anything. Okay. And it is as simple as understanding the overall trend. And sometimes we don't, I've been doing this a long time, but these banners right here, if you haven't figured it out, are my Fibonacci. So they're programmed for my Fibonacci, what I teach you right here in the room. So you don't need to like think too hard. Like if you understand my Fibonacci, then you understand why these color codes are popping up. So it's a bullish trend. So there's two different things that you can do. Okay. You can, if you don't like to go short, that's fine. But the rules of the PMZ is we go long above it, we go short below it. Right? That's it. And I told you today we were opening up underneath the PMZ, and I told you this would be a place to short or sell call credits. So if you did that, you made money to the downside. Okay, that's great. Let's say that you're like, well, I don't like shorting. Some people just don't like shorting, man. So where do you go long? So you want to go long at levels that are on your chart. So if I had levels down here, which I probably did, I probably had some kind of line down here. If we come down to a line and then you start to get these yellow signals, then you look to go long. Okay. Now, if you don't even like doing that, then you could go long above the cloud. Okay. A close above the cloud. Boom. Stay in the long as we stay open and bid above the cloud. That means even if you dip in, you don't get stopped out, guys. You wait for a candle to close. So maybe you didn't take that trade. Maybe you need a little bit more. So then you take the PMZ. When we break above the PMZ, we close above the PMZ, you go long and you see the PMZ is supported. Netflix then comes out with its earnings and then the rest is history. All right. Now, tonight on a 5 minute chart, this is a very important rule to understand. Look at the low here and look at the high. You have to ask yourself, is this a pretty big move? 48.76 into 49.06. Okay. So you're talking about at least 30 points here. All right. 30 points in 2024 is, it's a decent move, right? And that's because in nowadays we expect bigger moves and faster. We're very impatient, right, as humans, and it's a decent move, all right. But decent to I would say 50 points. I'm looking for more digestion. 30 points, I think we still have room to run before we digest. But either way, this is a strong trend to the upside. And what's happening right now is you're digesting. So you have to really pick apart. Do you want to go in long after a big move, or do you want to wake up in the morning and just fill it out? Right? What I found is after a trend, whether it's up or down, and this is not nothing new, is that you want to be patient because a lot of people get chopped out. And that's why I come up with these liquidity chop zones. And this is pretty wide tonight. Okay. So I expect resistance right here in this yellow. This is actually a yellow area here. It's resistance. I expect this to be resistance until proven otherwise. Now, what I did was the two charts that I've given you on Sunday and Monday is I took the quarter half of it. This was a red box that was about this wide or so. And what I did was I took the last half of it, if you will, and made it a resistance point. And that's what this is up here. Okay. Um, if we could break up and over liquidity chop tomorrow, my final target is up here towards 31 and 45. And by the way, guys, if you forgot, we still have our SPX calls for the end of the month. All right. So if this thing wants to kick ass and keep moving, we're going to be in the money before you know it. All right. It's like, it's right around the corner. It's not impossible. We still have 1, 2, 3, 4, 5, 6 days before that even expires. So looking pretty close, man. We're not too far away, if you ask me. All right. Where did SPX end today? Let's see. Oh, and by the way, I did the same trade on TNX or TNX, TXN, and I'll show you that here in a second. Oh, nice. Nice, Ken. Very good. Yeah, and you guys will learn, what kind of allocation you want to put into these type of trades. The more you take them, the more you'll, start getting convinced that hey, they work more than they don't, and then maybe your allocation will come up or maybe it won't. Totally up to you. There's no pressure though. So it looks like, yeah, so where do we were at 48.64? 48.64, right? And we're up. Yeah. So we'll probably be around 4,900 tomorrow. Yeah, we're pretty close. Pretty close. Anyway, so we have some econ data coming out tomorrow as well, that could do some damage there in the market, meaning to the upside or downside. Let's look at TXN real quick. So Texas Instruments. All right, so I did the same thing on Texas Instruments, guys, and we're in the money right now on the put side. So just kind of show you guys how that worked. So this was my trade. I did not put this on social media. This was just here in the room, but you could see we were going to get paid on this trade as well. And what I'm going to do here, and let me go ahead and pull up my trade so you guys can see it, is I went short term on the puts, okay, and short term on the call. All right. Now, this is my idea. All right. Are you in this one as well? And if you are, cool. If not, no big deal. So this one will get paid for, right? We feel pretty safe here unless this thing bounces like hell tomorrow. And even if it bounces, I actually feel really good about both sides. So we're sitting over here, okay, in the money. Gonna make money from that trade. I don't think that it was a whole lot. Matter of fact, I think when I came back here, I looked and realized I didn't do a 5 point spread, so I kind of messed this up. And not a mess up it like in a bad way, but I could have bought the 175 and sold the 170. But this one's decent, right? This still pays out probably over 100% or something. So, anyways, the plan of management on this tomorrow is to close this out for profits, and then we'll buy back the body, and then we will save these. And if for some reason I get paid here, and then all of a sudden TXN starts going green, all right, then guess what? I'm going to get paid here and possibly here. You never know. All right. So that's what this is looking like. So two good trades, guys. But again, we have a long time till the morning opens, and we have a lot of other awesome trades going on. I might as well, since I'm sitting here, I'm gonna have to cut all this out because it was meant to be just about the Microsoft trade, or sorry, the Netflix trade. But we are up 244% on Snow. So let's go over to Snow and check them out. They're up $2 after market. We're almost to a target. I updated the room today. I was looking for 209.85. My overall target's 226, and we still have geez, 24 days left. We're up 250%. Then I got some Baidu. Baidu is looking like, aftermarket. I don't think Netflix or anybody's going to have any kind of like impact on these guys, but Let's see where they're at after market. If you guys have any questions, let me know. But again, yeah, there's no impact right there. But my overall target is 113. How much time did I buy on Baidu? Oh, sweet. I bought next week. So that's Baidu, and that's up as well. We have some, I bought some RIG, RIG. Okay, RIG. And by the way, how's the audio? I try to fix some stuff on the audio side. Um, all right, and then what else? Yeah, I mean, everything's looking pretty good, guys. BA down about $2. Who knows why? What is this BA? 131 before Market Central. They have their earnings, but they gapped down for some reason. I'm looking for them to close this week, so that's okay. We've come down a little bit, and then I'll be looking for a pop up here, but it's just a butterfly. And then TXM, we talked about that. Everything else is looking pretty damn good. So, anyways, it was an amazing day with you guys. I appreciate you. Anybody out there that's supporters, I appreciate you. And if this video has helped you and you kind of understand what I went over and all this mumbo jumbo I've been talking about on the back end, don't worry about it. If you're just jumping in, I talked about the Microsoft and how I traded it. Please watch that for like the first 20 minutes or so. Teach you kind of how I approach that. Again, don't forget to hit like and please tell your friends and family about trendy trading. I hope to teach them methodology as well if they're interested in trading. And if not, that's okay too. Thank you. It's my pleasure. Have a great day.